Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
I've already done one. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Friday morning, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning, folks. This morning felt like the one on, what was it, 9th of April? Was it, no, 2nd of April. 2nd of April. When he stood out.
3rd of April.
3rd of April, our time, when he stood out in the gardens with a placard. Today, we don't have the man standing with a placard, but we have a whole rate of tariffs across so many countries.
Absolutely. And the news, though, is that, you can call it whatever, but the tariffs are going to go into effect from the 7th of August, not 1st, which basically gives another 7 days.
7 more days.
Some negotiation, some hope. Yeah. And, expect anything from Trump. Overnight, what caught my eye was Triple H. I'm not sure whether you all used to watch the WWF, WWE.
Oh, yes.
Making his way into the White House and talking about fitness and sports, Triple H, and then he did that. Puts the water and
what are the guys'
splashes
actual
up.
He's a very close friend for the last 20-25 years, very close friend of Trump's.
I thought your close friend.
Triple H, right? The guy.
Triple H.
So what is this?
It's a little difficult.
Water fountain guy.
Yeah. We'll get to that. But
so
imagine Triple H in White House and sharing podium with President Trump as well. Expect anything.
Nigel, by the way, check out the White House. I think it was a White House tweet. I'm mentioning this because it's your sector, metals, mining minerals, etc. There's a piece of rock coal. And it just says something. I mean,
big,
beautiful she looks.
Yeah, big, beautiful coal.
I think that was 6 or 7 hours back. So there is enough and more, right? Drama, entertainment, whatever you want to call it. But let's take it from the top in terms of what you need to know as we start another trading session. You basically have the tariffs which are going to be effective from the 7th of August. Now, the reason given is that, the systems need to all be ready, etc. Customs and, collection mechanisms as goods come in, they need to be ready. But the point is, we already knew that, right? 1st of August, everyone knew was when tariffs were going to take effect. So this 7 days could have started 7 days before the 1st of August. So it's not as if, so I'm sort of looking at it as an extension in that sense. So all tariffs on the 7th of August, not on the 1st of August. And it gives some countries more time to negotiate tariff rates lower. Actually gives all countries, in whatever way they can, to negotiate these tariff rates lower, us as well. So for example, for the big factor or whatever you want to call it, yesterday was, of course, that 25% plus the penalty rates, etc. as well. So will we be able to do something in the next 6 or 7 days to bring these rates lower? If there is one thing about President Trump is it's never it. There is always room to negotiate. He's a transactional guy. He's a business guy, and and that's a good thing. And of course, sometimes it's a bad thing as well. So, but it's never it. It's never written in stone. It's always subject to negotiations. And as he himself says, loves to negotiate and negotiate on. Let's just sort of look at some of the other factors. So apart from the tariff bit, you had U.S. equities, which kind of fizzled out after opening at all-time highs yesterday. So the all-time highs was on the back of Meta and Microsoft, which were strong gains yesterday. But then, there were these tariff headlines, and there is non-farm payrolls, the jobs data, which will come out later tonight. So the macro markets, which mattered, S&P was down 0.4% last night. VIX went up about 8%. You also had oil prices, which cooled off a little bit. They'd hit almost about 74. So now about 72.5 is where they're at. U.S. data, and especially core PCE, which is the Fed's sort of favored gauge for measuring inflation, it kind of confirmed. It accelerated a bit more than expectations, and it confirmed Fed Chair Powell's warning in a way. At least the market took it as a warning in terms of being data dependent, etc. Dollar index is back to about 100, and it's the first, by the way, monthly gain that we had in the month of July. Year to date, So is the dollar headed a little bit higher, or is the trend slightly lower? In after hours earnings reactions, so Apple, the last I checked, 2%, and you had Amazon, which was down 6%. Those rates would have changed. We'll track it. I mean, the real reaction will show up as cash markets open later today in the US to these numbers, but these are earnings related. US jobs today, consensus is at about 105,000 jobs. Last 3 months average is 150,000 jobs. So, and there is a bit more focus on this data point, comes out right as US markets open than in other previous months. Now, just to tie in the levels, markets were resilient yesterday, and we actually, given we started sharply lower, then there was a sharp pullback higher. We were up substantially, and then the market was sold off. There was a whisper whether Jane Street is back, right? And at least on social media, maybe half joking. But I can tell you they're not. I mean, at least that's essentially, they're not in the market. But there was a fair bit of movement, and that spiked volumes, especially options volumes, etc., quite high. So here, the Nifty yesterday held the low of 24,598, which is the level we put out yesterday morning as well. That never came into contention, which then basically opens up the possibility that, will we need to go lower? 24,450 to 24,500 is the medium-term support that we put out earlier as well. I mean, that is only if this 24,598 level goes. And on the way up, resistance is the recent high of 24,956 and the 40-hourly exponential moving average, which is 24,994 or so. For the Nifty Bank, we should not now break yesterday's low. So again, there was a sharp dip, and then the market jumped, the index jumped. So the low yesterday was 55,547. And resistance here is the high of 56,406 or so. So that is the lay of the land, state of play as things stand right now. GIFT Nifty will give you a quick sense of how we are likely to start, and we'll pick up from there. About 100 odd points lower is what the GIFT Nifty implied open is suggesting. Surabhi.
Yeah, absolutely. Let's see if some of those lower levels get tested again today, because yesterday the Nifty managed to somehow hold its head above water. But Asian markets are down. I mean, there is renewed worry on tariffs, because now these numbers seem to be final, at least for now, and they kick in the next 7 days, as the US president has been saying. So the drop is the most pronounced, interestingly, in the Kospi. The South Korean Kospi is down 2.5% right now, though, of course, they've also got a better deal now with the 15% kicking through. But most other markets, barring Hong Kong, by the way, Japan is down, Kospi is down, Australia is down. But the Hang Seng, as well as the mainland Chinese markets, they're flashing a little bit of green, because obviously they've been given not an exemption, but yeah, there's a separate negotiation ongoing. So none of these new tariff and new measures, they don't apply to China just yet. So some green over there. US futures have been down between 0.1% to about 0.3% as well. So slightly subdued this morning. The biggest story in town continues to be the dollar. Even this morning, it's surging above that level of 100. So far this week, it's been on an accelerated pace. The pullback on the dollar index is up about 2.5% this week. This morning, if you just pull up the level, it's at 100.13. So from levels of just, well below 97, now we're talking about 100 plus. Now for us here, the silver lining comes in. That's the dollar index I'm talking about. So, full round 100 on the board once again. For us, the silver lining that we see is, macro. Some good news came out on the fiscal deficit numbers for the first quarter. The fiscal deficit is at 18% of the full year target. So even if you break it down, quarterly, it's not at 25%, it's just at 18%. And the other good news is that capex spending year on year is looking better. Of course, you'll say that base effect, last year we had, a lot of other issues going on, elections, etc. But even then, it's good to see that capital expenditure is a full 1 lakh crore higher than the same time last year. The Nifty down 3% in July. It's been a slow, painful grind down. Are there, lower sides or lower levels still on the table? We'll find out. We haven't tested the zones of around 24,500 just yet. So we'll see. The flows picture is not inspiring any confidence. So I don't have any good news to report over there. Yesterday, in all this volatility and tariff news, look at the selling. 5,570 crores of selling coming through. Thankfully, domestic institutions have been constantly offsetting that. Yesterday, big buying from domestics, almost 6,400 crores. Quickly ending with the earnings scorecard, and we have many, many, many numbers to go over. It's a fairly mixed picture. We don't have one big bombastic outlier number that I'll call out. But generally speaking, Coal India has been very, very strong, above most of those estimates, starting from the top line down. Eicher Motors is in line, no disappointments with Eicher. So let's see if the money gravitates here. And then the others come in. Swiggy, the losses have expanded, so it's not as pristine as an Eternal. Thermax, the margin expansion is phenomenal, and we'll talk about that company, but the revenue is down about 2%. So it's mostly mixed for a lot of these other companies. RR Cable is very good, actually. Like the other wire and cable players, even RR Cable's numbers look pretty solid, 48% up on the EBITDA line. And PB Fintech seems to be reporting a mixed bag as well. So more earnings today. Hopefully the big tariff headlines for now are at least out of the way. Nigel.
Well, we had 4 very, very good series, and the July series brought a pause to that run that we have seen. So after 4 straight series, the Nifty ended in the red in the July series. The question is, can we see a pullback in August, particularly towards the second half of trade, because we'll have clarity on various fronts. In July, just to take a quick snapshot, the Nifty was down close to 3%. The problem was the broader markets. That was down close to around 4.5% or thereabouts. But with the reasoning, weak earnings, too much of paper supply, lack of clarity with regard to the US trade deal. And also, you had some kind of preference to other economies, other markets, because the Indian markets are not particularly cheap. The good news is that, in fact, the India VIX, it continues to remain at subdued levels. It's the lowest we have seen in the last 40 weeks or so. So that's indicating that there wasn't panic selling. There could be more sector rotation that's taking place. And with the VIX sub this 15-odd mark, you'll have to say there's still no panic in the system. At least that's what the data point is suggesting. Moving to how heavy are we at the start of the series? Well, the Nifty futures open interest is as heavy as we saw in the previous series. So that's another data point. What about positioning? The FIs, they have hit, towards the highest we've seen in the last many, many months at the start of the series. So the FI short positioning at around 90%. Take note of that. Diametrically opposite, you have the clients long positioning at around 70%. So that's how they have shaped up. And if you look at it in absolute terms as well, at the start of last series, I recall saying, the problem is we don't have too many shorts in the system. Well, you have to be careful of what you ask for, because now, in fact, if you compare last series, the FIs were net short with 35,000 contracts on the short side. Guess what? Now they are at 138,000 contracts on the short side. So big addition of short positions. I'll tell you what, I like it. I like some short positions in the system. The clients, well, they have added on to long positions. So now they're clocking close to around 1 lakh contracts on the long side. Moving to the options data, well, yesterday there was one strike that was fairly active, which was the 24,700 put. And that saw a fair bit of addition, premium roughly around 108 rupees. So just punching in that number, and in fact, looking at the total setup that we have, well, we have crucial support. This 24,400, 24,600, well, that's the important level. And data points suggest we shouldn't break this on the downside. In terms of today's trade, well, the reference point you have is the recent low and the recent high. So you don't want that band to get broken out. One problem for me is the leverage in the books has been moving up, because the margin trading book a few months ago it had come down to sub that 70,000 crores odd. Now it's moved up to around 92,000 crores, and it's gradually been moving up. So you need the bulls to get their act together. Otherwise, leverage in the system normally hasn't been such a good thing, particularly for the broader market. So keep that data point in mind. Finally, what are we looking forward to in the August series? Trade negotiations with the United States. Can the RBI, push some more liquidity into the system and help the economy recover? And we'll have the MSCI rejig as well. A few stocks will be in focus. Vishal, Megamart, and the likes. Hitachi as well will be in focus. And the Nifty reshuffle takes place in August. Interglobe is a stock that we'll be looking at, because probably we'll have an aviation stock in the Nifty. So those are the top cues.
Okay, all right. So plenty to track, and hopefully August is going to be better than July. Let's start with the equity call of the morning. Then we are getting one from Lawrence Belanco of CLSA. He says there's a confluence of supports provided by the May-June lows around the 24,462, 24,473 levels. He says as long as the price action holds above these support zones, they would continue to give the benefit of doubt to the upside.
Jahangir Aziz is now with us, Head of Emerging Markets Economics Research at JP Morgan. Jahangir, good to have you with us here. Thanks very much for your time. Thanks for waiting. Quick word, Jahangir, first up. Does the 7-day extension, if you can call it that, give us time to negotiate these tariffs lower?
I'm guessing that at least there will be a lot of activity and a lot of effort being put into negotiating these lower. Whether it'll be negotiated lower or not, is anyone's guess. But I'm guessing that's the direction of travel, that the Indian and the US would try to negotiate these these tariff rates lower. 25% is pretty high, right? And let's not forget there's a penalty, and there's a penalty on top of that. So.
Yeah, so the penalty is the unknown, right? Do you think it's a serious threat and there'll be a number instead of the unspecified penalty, or that's just sort of something, a sword hanging, left hanging, is part of the overall negotiation tactic?
Look, I mean, the way in which this administration has dealt with other matters, I think at some point in time, the threat becomes a number. So I'm guessing that at some point in time, the threat becomes a number, whether it's 10, 15, 5, I have no real idea. But I'm guessing it is going to be a high enough number so that it conveys the sense of, urgency and, inflicting pain on those who do not, those who keep on buying Russian oil.
Jahangir, hi, good morning.
Hi.
The US itself has been absolutely resilient, right, throughout all of this. And as President Trump was saying yesterday, that there'll be, billions of dollars pouring into the United States now from, maybe not from the 1st because it's effective 7th, so maybe from the 7th of August. But what are your forecasts for inflation? Do you see any increase at all, or, will it continue to be pretty solid?
So we are looking at a spike in inflation sometime around August, September, where core inflation breaches probably 6% on an annualized basis. You can already see that in the data if you're willing to look for it and rather than just look at the headlines and go away. So if you look at goods inflation in the US, ex autos, in the month of June, it was running at an annualized pace of 6.8%. So this idea that tariffs are not having an impact on inflation, people are just not looking because they're just looking at the headline and walking away with that. And if you look at the amount of the observed tariff rate, not the kind of tariff numbers that analysts that come around and say that it's 15% or 12%, 13%, but the actual tariff rate, the total amount of tariff divided by the total amount of imports, that's running close to 9.5% to 10% in the month of June. It was running, as you must know by now, 2% back in December, and the run rate over the last 3 months has been on average around 7.5%. So 7.5% of in tariff, which was about a 5 percentage point increase from what it was, let's say, in December, delivers you a 6.8% inflation rate on goods goods inflation. So inflation is being affected by tariff rate. That's the reason why the Fed chair is very wary of it. People are just not looking under the hood. They're just looking above the hood and saying, well, things not really do that bad.
So, Jahangir, isn't it surprising that a market's supposed to, price in the future? And if the future is saying 6% inflation in the US, then isn't the equity market resilience surprising?
Look, if you talk to any of the, economists, they will tell you that at the end of the day, this increase in tariffs is essentially a consumption tax. So if you look at the actual, not the observed tariff rates, but the actual amount of tariffs collected in the month of June, it's running at an annualized pace, not the month of June, but if you multiply it by 12, it's running at about $350 billion. So that's essentially the amount of taxes that consumers or corporates will have to pay. That has to either get absorbed in lower profit of 350 billion or higher or increased taxes of 350 billion, or some combination of the two. So there is a pain. There is pain already there in the system. It is just that it is not surfacing up to the headline numbers, and our sense is that give it time. Let's wait for about a month or so. It will hit the headlines.
Hi, Jahangir. Let's look inward then, because, the US piece seems to be a little bit puzzling, what President Trump will do, what the Fed will do next. Let's talk about the RBI, because there is hope that there could be some monetary easing. I'm not sure whether more can be done, but what are you factoring in, and what do you expect from the RBI? Because the big meet comes up in August.
Look, I mean, there is monetary easing and there is the impact on how the market reacts to the monetary easing, but I will leave that aside. So yes, I mean, I know we don't have a rate cut anymore. We don't have a rate cut. We have things on hold. We had 100 basis points of rate cut back in September of last year, when people didn't have any rate cuts. We got the 100 basis points of rate cuts. We don't have any more left. But my guess is that if you look at the statements coming from the RBI, they have now sort of shifted away from the statement that they have in the policy meeting to saying, okay, we will be data dependent. My guess is that they'll be forced to be data dependent. And if growth slows, and if you don't get any spike in core inflation, I think the space gets opened up. Now, as I said, we don't have it in our baseline, but my hunch is that the risk is that we probably will be seeing rate cuts or more, more liquidity being pushed into the system. But I think you have to wait for it. And if you get a rate cut signal from the Fed, whenever it is, I think that would be a good opportunity or good point at which the RBI can hang its hat on that and say, okay, fine, we are going to start cutting rates a little bit more. But we don't have it in the baseline. But the risk, I think, is that you will probably see more rate cuts.
Jahangir, pleasure speaking with you. Thank you very much for joining us. Good getting that insight on a variety of subjects. Let me just quickly run you through the stuff that is lined up here over the next 2.5 hours or so. 8:35, you'll hear from the management of Dr. Lal Pathlabs to discuss their first quarter numbers. 9 o'clock, you'll have the management of Niva Bupa Health Insurance. Stocks done well. 9:20, Sandeep Bhatia of Macquarie will weigh in on the market. 9:30, Thermax will be with us to decode their first quarter earnings. JSW Energy will be speaking with us. It's all about numbers today, isn't it? 9:50, we'll have the management of Cholamandalam in Finance to talk about their earnings. Lots to talk there. And of course, 10 o'clock, Jasbir Singh of Amber Enterprises talks to us about their numbers and their acquisition as well. It's the economy with Lata at 10:15, and they discuss the state of global and Indian economy post-tariffs with Chetan Iyer of Morgan Stanley. That's the lineup.
Time to slip in a short break. Got a lot of stock-specific action to track for you on the other side. For the time being, we'll run you through the list. Coal India, Swiggy, Mankind Pharma, JSW Energy, PP Fintech. They'll all be reacting to positive news flow. Add to the list Thermax. On the flip side, Eicher Motors, Niva Bupa, Aarti Industries, PNB Housing Finance will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Well, the cues across Asia are fairly tepid, barring the Chinese markets, which is the Hang Seng and even the mainland Chinese markets. You don't have too much reading even there. I mean, the Hang Seng, just 2 points higher. Fairly subdued, and some of the markets like South Korea are down well over 2%. Let's pull up the implied open. It's suggesting that, once again, the start is going to be on the downside. And then we'll see if we can pick it up from there. There you go, 130 points lower. Lots and lots of earnings to go over. Plenty of stocks on our radar. So let's straight away get to it with our list of top 10 stocks to watch. Our team is standing by. Guys, good morning to all. Let's start with, of course, all the big earnings. So Darshan, how is Eicher Motors?
So Eicher Motors has reported largely in-line set of earnings for Q1 FY26, and company continues to maintain its commentary about preference of growth over margin. But that's a concern, because for a revenue growth of 17%, you are reporting EBITDA growth of 3%, margin falling below 24%. It remains to be seen for how long and what's the level that Eicher will want its margin to settle at. But as of now, on the margin front, it's a concern. Talking about the headline numbers, profit has increased 10%, revenue was up 15%, EBITDA has seen a just jump of 3%, and margin has fallen to 23.8% from 26.5%, almost 300 basis points fall. That's year on year. Now, on the volume front, along with TVS Motor, Eicher continues to outperform its peers on YY basis. Royal Enfield volumes were up 17%. Even on the commercial vehicle side, it saw a growth of 11% year on year. Commentary, it's looking largely positive and saying that Royal Enfield continues to gain market share in the middleweight segment, but we'll have to see how does market react to its commentary related to focus on growth over margin. But as of now, I'm going with red.
All right, you're going with red. I'm hoping they launch a new bike soon, maybe an 800cc, which is not on the cards, but nothing wrong in hoping. Sudarshan, thanks for telling us about that. I'm going with green for Coal India because those numbers look good. Top line was a little bit better. EBITDA number was better at around 12,500 crores. Even adjusted for the shipping ratio, well, it'll be around 11,200 crores or thereabouts. So it goes down as a beat. How did that come about? Well, the street was bracing for a bit of a weak quarter because the last month or so as well, the volume offtake hasn't been great. And we already had the cheat sheet because we already had the volume numbers with us. So there was no operating leverage that will play out given that the volumes are down by close to around 4%. But yet they managed to outbeat the numbers. How was that? The realizations are more or less steady. That's on the blended basis. The FSC realizations moved up marginally by around 1.5%, which is good. And the e-auction realizations didn't decline as much as estimated, which is good as well. So the e-auction premium to FSA sales is at around 50%. The street was working with a number of around 45%. The employee cost as well was lower because the number of employees are down by close to around 3%. And in addition to the good operational performance, they've given a dividend of 5 rupees and the gross trade receivables on a sequential basis has come down a little bit. So green on Coal India. But hopping across to Ekta, she's here to tell us about Mankind Pharma. Ekta.
Well, morning. Mankind Pharma revenue looked good. It was up around 23.4% year-on-year, largely in line with estimates as well. Margins came in at around 23.7%. The street was anticipating around 25%, and there was a profit decline this quarter. Maybe the stock would be resilient on account of the internals, such as the domestic business, which was up around 19% year-on-year, the consumer healthcare business, which is a part of the domestic business, which was up 15%, and exports, which was up around 81% on a year-on-year basis. What could probably weigh a little bit on the stock is the operational as well as the profit estimates, the profit performance as compared to estimates.
All right, Ekta, thank you very much for that. So it's Mankind in focus. JSW Energy is the next one we want to talk about. Vivek is here with details. Vivek, morning.
Well, good morning. Well, a strong showing, especially when you're comparing it on a year-on-year basis. But remember, it's an optically very strong number, given the fact that there are two new acquisitions, two new platforms that have started contributing to the earnings from Q1 FY26. So when you're talking about the revenues have jumped up by 79% on a year-on-year basis. EBITDA almost doubling on a year-on-year basis. EBITDA margins at 54.3 versus 49.4%, and profitability higher by 42%. So what is it that aided the profitability compared to last year? So KSK Mahanadi, this particular asset that the company acquired, that got operational, 1.8 gigawatt got operational, and that contributed EBITDA of close to 867 crore. Along with that, Utkal Unit 2 has also started operation, and almost 370 million units of power was generated over here. The O2 power platform also started generating, and that contributed EBITDA of close to 219 crore. Now, the company has upward tweaked its guidance as far as 2030 capacity addition is concerned. They are now aiming to take capacity to 30 gigawatt. Remember, the company currently has a capacity of close to 12.7 gigawatt. What was a slight miss was the fact that merchant power volumes as well as prices were slightly lower. So the open or the non-long-term capacity was something that did see quite a bit of a dip this time around.
Okay, in fact, thanks very much for that, Vivek. We will be chatting with the management of JSW Energy. They'll be joining in around 9:40 to talk about their performance. Okay, let's move on. A couple of numbers coming in from the insurance space as well. Yash is joining in. Yash, how did it look for PB Fintech and Niva Bupa?
Well, to start with PB Fintech, the numbers for PB Fintech were pretty strong. The premium growth has, exceeded the industry. The premium generated about 40% growth as far as that is concerned. The operational performance also remains strong in the quarter. If I have to speak about the highlights, the core online insurance premium was up 35%. New protection, which is health plus term insurance, that also grew by about 46%. Operating revenue, that was up by about 33%. Core online insurance revenue growing by 37%. So strong operational performance. This was on expected lines coming from PB Fintech as that guided as far as the fourth quarter also is concerned. This time around, both the core online business and the new initiatives business both have performed very strong, contributing to the overall revenue growth. Niva Bupa, the numbers have been very bad this time around in the first quarter. The net earned premium, that has grown at about 20%, but the operational performance is very, very weak. Underwriting loss has increased 100%, almost 100%. That has doubled. Operating loss has come in at about 145 crore versus a profit of about 23 crore. Combined ratio has spiked very sharply to 117% as compared to 106%. So decent premium growth. This is slower than what the company has been doing in the past, but the operational performance deteriorating very, very sharply in the first quarter.
Okay, all right. Thanks a lot for that, Yash. Let's hop across to Vamakshi. She's here to tell us about Thermax. Vama?
Good morning, Nigel. Thermax, the revenue was a miss. It declined by almost 2% on a year-on-year basis, and this is coming after, several quarters of revenue growth. This is disappointing, definitely, but, the operational performance, on the other hand, was much better than what the street was working with. The EBITDA has managed to improve by almost 401 basis points on a year-on-year basis, and this is because there was an incentive from the government worth almost 56 crores. The net profit resultantly saw an uptick of almost 38% on a year-on-year basis. Now let's look at how each segment has performed and contributed to the margins this time around. Industrial products and chemicals, which are generally good contributors to the margins, this time they're seeing a degrowth. The industrial products margins are down 88 basis points, and the chemical business is seeing a much sharper cut of almost 850 basis points this time around. On the flip side, industrial infra margins have improved substantially to by 996 basis points, and this is mainly on account of the incentive that I mentioned earlier. And the green solutions business is picking up as well, up almost 183 basis points. Now the ordering activity, it was quite robust. It did order inflow was up almost 7% on a year-on-year basis, and the order book as well was up almost 7%, and this has come in higher as compared to what the analysts were expecting. So overall, the revenue has missed estimates, but the operational performance was much better on account of the incentives, and resultantly going with the green for this counter.
All right, and we'll have the management with us, a little later to talk about these numbers and the outlook as well. Swiggy is the next one we want to focus on. Mangalam has got this. Mangalam, morning.
Good morning. So Swiggy, if you look at the reported numbers and you look at the internals, there'll be two different stories. The internals are stronger, and I'm going with green because on a reported basis, the net loss has widened all the way from 445 crores to 1,000 crores because of the quick commerce spends. But food delivery, that continues to do well and also sees, operating leverage benefits come by out there. And in quick commerce, the good part is that the company, just like Eternal, has said that they've moved past peak losses in quick commerce, and their average order values are now fairly comparable to that of Blinkit. So all of that points towards green for Swiggy. Remember, the reported revenue grew by 54%. The EBITDA was a loss of 954 crores, and the net loss was largely led by ad and sales promotion expenditure, which was on account of the Max Saver and other schemes that they come out with on their quick commerce business. Food delivery growth at 18.6%. The EBIT grew over 200%, telling you about operating leverage out there. And quick commerce revenue growth of 115%. If you compare it with the way Zomato or Eternal reported their numbers, they've been gaining market share in food delivery. Zomato's food delivery business grew 16%, whereas Swiggy grew 18.8%. But Blinkit has grown a lot faster than Swiggy. And that is something that the analysts expect already, which is why Swiggy trades at a sharp discount to Zomato as well. They've maintained their contribution margin positivity band for quick commerce. The only thing I'm watching out for is that they have 12% stake in Rapido. And with Rapido now entering food delivery, they are looking to monetize that stake. So whenever that happens, that would be a further addition to their cash balance. Going with green on Swiggy.
Okay, all right, got it. Yeah, indeed, they put out that public statement as well that they'll have to reevaluate what they want to do with that 12% stake in Rapido, because Rapido itself is getting into a related business now, which is food delivery. Thank you for that, Mangalam. We'll watch out for Swiggy for sure. Let's move on and look at Aarti Industries as well. Sonal, how are the numbers?
Weak numbers this time around. Again, there is pricing pressure that the company talks about. The revenues were down 7%, EBITDA down 31%, profits were down 70% on a YY basis. The company says that revenue declined to reduction in key raw material prices, and also some of the shipments were delayed from June to July. Quarter-on-quarter volume decline also came in due to some demand concerns, and pricing pressure continues to persist across major segments that they are working in as well. Their guidance stays 1,800 to 2,000 crore rupees of EBITDA by FY28. Capex for FY26 is estimated to be around 1,000 crore rupees. But going with red because the indication was maybe pricing has bottomed, but Aarti Industry says otherwise, and a big player in the industry. So there will be an impact on the stock today.
Okay, all right. Thanks a lot for that, Sonal. Well, let's go back to Vamakshi. She's tracking PNB Housing Finance. Vama?
Well, not great news for the company, Nigel. Mr. Girish Kuski, who's the MD and CEO of the NBFC, has tendered his resignation, and he has cited that he would like to pursue opportunities outside. His resignation will be in effect from October 28th, 2025. Now, keep in mind that he was appointed as the CEO and MD of the company just 3 years ago, and he will also cease to be director on the board of directors of PHFL Home Loans. The company, however, has not yet announced who will take over. Keep in mind that since his appointment as at the helm of the company, the stock had gone up by almost over three times, from November 2022 to its recent 52-week high of almost 1,200. This overall news flow is negative because this comes after a slew of exits that have taken place at the company. So therefore, going with a red for PNB Housing.
Okay, all right, got it. Vamakshi, thank you very much for that. So PNB Housing also on our radar today. We've got Manisha now joining in to tell us what the action in the commodity space is looking like. Manisha, morning. Big rise in the dollar, right? Once again, 100 on the dollar index. So what does that mean? What's been happening with commodities?
Oh, well, yes. As expected on textbook basis, we have seen a decline across commodities as well. And not just energy and the metals, but most of the agro commodities also have gone for a sharp decline because as the dollar index hits 100, it becomes difficult for the exporters to keep those margins there. So whether it has been about rubber or cotton or corn, all these things that U.S. tends to export, all of that has seen a very sharp decline into the markets right now. But I do want to talk about copper as well, because after that 18% decline day before, overnight has been yet another 6% of a decline. So on the week, we are down by 24% when it comes to copper. The profit taking has been seen across board as well. It's a sharp pull-off when we see that when we look at the steel prices, that one is off its 7-month highs. Iron ore prices fell 2% overnight. Aluminum and zinc have declined quite sharply. Silver is now trading at a 1-month lows. Gold prices have slipped below $3,300 an ounce. Also, when you look at the Chinese data, the PCE numbers have come in much weaker than what the street was anticipating. So the economic data is not supportive as well. The dollar index is on the higher side. The tariff concerns are keeping the markets very edgy. So as we head into the weekend, I do see a lot of profit taking continuing for many of these commodities.
All right. Manisha, thank you very much for that. So that's commodities in focus there. We're going to take a quick commercial break here. Up next, you'll hear from the management of Dr. Lal Path Labs, the first management on the program today, coming up in just a bit. We will also have Siddharth Khemka of Motilal Oswal Financial Services on Fundamental Stock Talk. What should you be doing with some of these names on the other side?
Welcome back. Well, let's get to our first corporate on our radar. Dr. Lal's, the first quarter's numbers are more or less in line, but they are guided for 11 to 12% growth with margins holding about 27%. We have with us Shankar Banerjee, the CEO at Dr. Lal Path Labs, who joins us this morning. Hi, good morning, Mr. Banerjee, and good to have you on the show as always. Well, we've got that growth guidance of around 11 to around 12%. Could you tell us, how much of it will be volume driven, and do you have any price increases that you intend to push through?
Yeah, hi, good morning. Thank you for having me on the show. So the 11 to 12% guidance that we have given is primarily volume led. And, even in this quarter, we delivered 11.3% revenue and the sample volume growth was 10.7%, which is primarily driven by volumes, therefore. The realization improvement that we see is not price driven. It is more of a mix, in terms of geography and test mix that we are consistently working on. Because our SwasthFit bundled portfolio contribution has also inched up, has come in at about 27% for the quarter. So primarily this 11 to 12% we want to achieve without a price increase.
All right. And West, which is suburban, the integration of suburban, that's around, I think, mid-teens as a percentage of your total sales mix. The growth there was relatively lower. You're expecting that to recover when? Quarter 2, quarter 3?
So, we had taken a sizable, or we had made a sizable change in the overall IT infrastructure that we were running the suburban business on, and that had caused a bit of a market, disturbance, and we hope to recover quickly, maybe in another quarter or two, so that, by in second half, we should definitely see significantly better growths in the West region as well. Growths are coming back there.
All right. And SwasthFit, that's been a driver. As a percentage of your mix, what will it contribute?
So for quarter 1 of this year, SwasthFit contribution has gone up to 27% compared to 25% contribution that we had, in the same quarter last year. So we have seen a 2 percentage point increase in terms of overall contribution of SwasthFit to our business. And we feel that, it continues to be strong for us.
All right. Just one thing, sir, with regard to the cash in the books, that's around 1,300 crores, right? And you've indicated there could be an acquisition that you're looking at. How soon? And what could the ballpark size be? Will it be 100 crore or 500 crore? Give us, what's your appetite as of now?
So we have close to 1,400 crores of cash right now on our books. And we continue to look for opportunity, and we are looking at, a geographic expansion, specifically in the south, where our current contribution and our presence is pretty low. So that's the area that we are looking at. We don't have any size in mind in terms of, the acquisition, but we would definitely like it to be in a geography where, or in certain cities and towns, which we can then get in and then grow subsequently. So there's no specific size target that we are working on.
Guys, on a slightly lighter note, but related to the business of needles, we got a blood test for my daughter a couple of weeks back. And she said, well, is there no way to take out blood without needle?
Without a needle. Oh,
I said,
I'm with her on that.
I don't know, Mr. Banerjee, that's the disruption we need, sir, to grow the business.
Yeah,
fine
needle
without it, but...
Yeah.
Sorry, what is that?
No, you are right. There are obviously a lot of people who would hate.
Okay, I think there's something wrong with my...
He's talking about people with the needle phobia. You're looking at one of them right here. I know the feeling too well.
Just one question on numbers, sir. So margins, you're guiding for 100 basis point contraction, right, for 26?
So beginning of the year, we had guided about 27% EBITDA margin. But after our first quarter performance, we are doing a bit of a recalibration. I think we'll be able to do slightly better than that for the year.
So you will raise your margin because you'd said FY25 was 28.3. You're guiding for 100 basis point lower. And now you're saying it perhaps is going to be not 100 basis point contraction. But
yeah, that's what I'm saying. We'll have to recalibrate that. We recalibrate and see. Okay. But it's likely to be slightly better than that.
Okay. All right. So we'll leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the business. That is Dr. Lal PathLabs at the end of Q1. Let's move on and welcome in Siddharth Khemka into the conversation this morning. Siddharth, such a huge list of numbers post-market hours yesterday, right? Tell us if anything stood out. Actually, let's start with Swiggy, because you can argue it both ways that losses have increased. But they themselves are saying, I was going through their press release, 100 basis points improvement in contribution margin on the quick commerce side, quarter on quarter. So it depends on which number you want to go with. What's your sense?
Definitely. Good morning, Surbhi. Good morning, everyone. So glad to be on the show. I think, yes, if you look at after Eternal's number, Swiggy seems to be catching up both on the food delivery as well as on the quick commerce side. I think one of the key factor that we are looking at is the average order value, AOV, which has been one of the key lagging factor for Swiggy versus Eternal. We are seeing that now it is catching up fast with Blinkit, and it should meaningfully improve the EBITDA margins going forward much faster than what we were earlier expecting. In the food delivery business also, Swiggy continues to gain market share. I think the 10-minute delivery, food delivery that they are offering, that seems to be making a big differentiator. And on the overall capex front, they have said that no new dark stores to be added over the next 6 months. I think that will be also a big factor. Whatever dark stores that have been added in the last 6 months, they will start contributing positively to the EBITDA. So I think overall, the expectation going forward is that the company should achieve the EBITDA break-even by the end of this. So Q3 is what the company is guiding for, and that should be a key factor in driving the valuation. So we remain positive on Swiggy. We believe the improvement ahead of schedule could lead to further upsides. Currently, we have a target price of 450 on Swiggy.
Okay, sounding optimistic on Swiggy. Some of us will be using the services over the weekend as well. That said, Sid, what about Coal India? The volumes were soft, so the street anticipated the numbers will be soft. They're not as soft as anticipated. In fact, on the operational front, it's looking pretty okay. Realizations relatively better and costs down. Employee count itself is down by close to around 3%. Your view on the stock?
Definitely, Nigel. So I think in-line numbers to our expectation, the muted volume was offset by better realization. E-auction volumes accounted for about 11% of total volumes with the e-auction premium of 50%. That supported overall profitability. For the current year and the next financial year, FY27, we are largely expecting volumes to see some improvement, which should boost the performance. E-auction premium is likely to inch up towards 70% going ahead, which should again be positive. Overall, what we are forecasting is an 8% volume CAGR over the next 2 years, which should lead to a 10% revenue CAGR and 14% EBITDA CAGR. So overall, what we are seeing is Coal India is focusing on improving its market share in the domestic cooking, non-cooking coal segment. Management is also focusing on expansion, which should be funded through internal accruals. And as you said, yes, good cash flows, good expansion, and a decent volume growth. Valuations looks comfortable. We remain positive. We have a buy rating and a target price of 480.
Yeah, all right. Coming back to you, Sid, with more, we'll take a welcome back. There's 7 minutes to go for close, and we are counting down to the pre-open session. The GIFT Nifty still indicating 130 odd points lower start. Two names said. One is PNB Housing. I mean, both news related, and we'll address this at 9 o'clock. And the other one is IIFL Finance. A change in management in one, and credit cost guidance being revised higher for the second. Stocks have done well, especially IIFL from the lows. Any thoughts here?
I think if you look at IIFL Finance, there has been a strong growth in the gold loan business. The only concern is that the credit cost guidance has been raised. So that is a big concern. Having said that, the credit costs have been slightly lower than our estimate, but if it were to go up, I think it could have some impact on the earnings going forward. So overall, I think even the management commentary highlighted that they have recalibrated their exposure and gradually exiting the higher riskier segments within the MSMEs and the micro LAP segment to prioritize on the portfolio stability. Within the micro LAP, I think the company is witnessing higher stress, especially in the states of Andhra, smaller cities in Maharashtra. And the good part, again, on the other side, as you said, management change that is factoring in. RBI has given approval to open 10 new branches. So that is, again, a big, from a regulatory perspective, a little bit on the positive side. So I think it's a mixed kind of view coming in there. So certain overall numbers, I would say that is operationally weak quarter. Strong growth in the gold loans is the only positive that we see from the numbers. But I would say within the overall NBFC space, we'll get better stocks where companies which are having higher growth. So remain kind of neutral in IIFL Finance from the near-term perspective.
All right, Sid, do you ride a bike?
Yes.
Yeah, you do. I don't know whether it's a Royal Enfield, but that's the only motorbike that I have ever owned from the time I'm 18 till now. 350, 500, 550, and now the 650. Hopefully they come with a bigger bike. My preference aside, what's your view on the stock? Growth is good. Margins seem to be a little bit soft.
So I have been riding Royal Enfield Standard 350 for last 10-15 years. So it's an old bike.
The thump, tat, 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 tat. Yeah.
with a cast iron engine, so that gives the thump. So some of the new bikes, I think I liked some, did not like some, but definitely that has helped the company report a strong volume growth, almost 15% growth. Exports has been a key factor where we have seen 41% growth. Domestic market has been stable, 12% growth. So overall, what we see is that we are expecting a 10% volume CAGR for the Royal Enfield over the next 2 years. And management is now prioritizing growth over margins. So that could keep the margins under pressure from here on. Stock price has moved up. And we believe that with a slower earnings growth, especially coming in from the Royal Enfield space, the stock could remain a bit sideways from here on. Hence, the stock having done well and the growth coming down, we will likely remain neutral on Eicher Motors.
Okay, all right. We'll take a quick break here. We're going to come back in just a bit. Technical trades, Mitesh and Srikanth with us on the other side. Stay tuned.
Okay, those are Friday smiles that we are wearing, though otherwise the cues have been a little somber. We're getting the pre-open rates, and remember, a lot of the Asian markets have been reacting negatively to all the new reciprocal tariff rates. That's the Nifty, and actually it's not that bad. The implied open was a little weaker, but we're getting about a 150-point drop. Actually, no, on my screen it's just a 70-point drop. Maybe we'll refresh it and see how that plays out. Rates will settle in a bit, and then we'll get to more of it. But we have to quickly look at the trades with our technical experts as well. So let's take it back to them. Morning, Mitesh. What are the stocks you're working with today?
Yeah. Good morning. While on the index, we have maintained a range kind of outlook with 24,550 thereabouts as the key support here on the downside and 25,250 on the upside with mid-range pivot at about 24,950. On the stock side, I have a mix of buy and sell calls today. Cipla is a buy if you get it on mild decline, say around 1545, 1540 zones. Buy with the stop below 1525 and look for a target for around 1590. Godrej Consumer had a good price and volume up move yesterday. So that's a buy with the stop at 1236. Look for targets of around 1305. Couple of sell calls. Ambuja Cement was a sell yesterday as well. Now can be sold afresh with a stop at 604. Look for targets of 570, and CDSL is a sell with the stop just above 1500 for targets of 1440.
Okay, all right, got that, Mitesh. Shrikant, let me come to you as well. Morning. What are the stock ideas?
Good morning, Survi. Good morning, everyone. As far as Nifty is concerned, I think it is stuck between the range of 24,600 and 24,900. So till the Nifty is not crossing 24,900 decisively, we are going to see range bound sort of activity, and we need to be more and more stock specific. But specifically, if we go through with stocks, then in that we like Keynes Technology. It reversed from its important support levels of 5,600. Also, the stock was sustaining above 50-day simple moving average. Yesterday, we saw solid buying interest. There was good amount of buying attraction because of results. But while looking at its entire pattern, I think Keynes Technology is heading for the levels of 6,500. We can keep a stop loss at 6,100 for the same. And the other stock on which we are bearish is IndusInd Bank. Currently, it is around 790, 800 sort of levels, but it is falling from the rising wage, which is something negative, and the stock may fall to the levels of 750 or 760 in the near term. So it's a sale at current levels around 790.95 with a target of minimum 770 and maximum could be 760. We can keep a stop loss around 805.
Okay. All right, got that. Shrikant, thank you very much for the trades. We'll come back to you gentlemen a little later. You just got those numbers in from Bajaj Auto as well, and it continues to look a little subdued. Total sales are up just about 3%, 3.66 lakh units. But if you look at the domestic, and that domestic story, that's what I'm talking about. Domestic sales down 13% year on year. It's been a tough last couple of months for Bajaj Auto when it comes to the domestic sales. Exports have been improving, and that trend seems to be continuing in July. But for the time being, we'll put the spotlight on Niva Bupa. Remember, Yash was just telling us about the numbers. Companies' net earned premium is up 19%, but losses have increased. The combined ratio has also gone up substantially, almost 117. Let's take this forward, discuss the trends and, of course, the prospects forward with Mr. Krishnan Ramachandran, MD and CEO at Niva Bupa Health. Mr. Ramachandran, thank you for joining in. So the growth seems to be coming in. That doesn't seem to be the problem. But I want to talk about the operational weakness that we've seen in the first quarter, this increase in the combined ratio. Can you just explain what the factors at play were and why we saw such weakness in some of the internal metrics?
Yeah, no, firstly, thank you for having me on your show, Surbi. Just to explain our results, I think it's very important to explain the results in the context of the right accounting standard. We've been saying that although it's not yet the statutory standard, IFRS is the right way to look at our company. And if you look at our numbers on an IFRS basis, and also importantly on a like-to-like basis, because there was an accounting change middle of last year in October 1, as you know, that the insurance regulator announced. But if you looked at our results on a like-to-like basis, our GWP grew 28% for Q1 over last. Our retail GWP, which is a big focus area for us, grew at 32% over prior year. That's number one. In terms of profit, if you look at it on an IFRS basis or an INDAS basis, which is going to be the Indian adaptation of IFRS, our profit almost doubled from 36 crores last year to 70 crores this year. And our combined ratio actually improved from 103.9% to 103.2%. Again, the reason I say IFRS is the right way to look at us is because there's matching of revenues and expenses. On the Indian GAAP side, there is noise because of the change in accounting standard. And, it will actually take about 2 years for that.
Mr. Ramachandran, that IFRS, I completely understand, right? So, for example, what it does is premiums that you collect, it spreads it over the life of the policy, right? That's how you're supposed to account for it. Just to give an example for our viewers. But it's not. I mean, it'll come when it comes, right? And that perhaps is the right way to look at it, and it'll significantly change how all insurance companies report financials. But on the basis of the reporting standards now, sir, if you can sort of provide us with some outline, yes.
Yeah, it impacts companies to varying levels. For a fast-growing company like us, where there is seasonality, acquisition cost in IFRS gets matched to expenses, right? So there is a difference in terms of how it impacts different company financials. And look, at the end of the day, accounting and insurance accounting is fairly complex. So from a consistency and a like-to-like basis, that's why we repeatedly emphasize that IFRS is the right way to look at us. It is the standard globally. We consolidate our accounts with Bupa on an IFRS basis. So, I would urge you to examine our financial results on an IFRS basis, because that's the accurate reflection of our economics.
Could you give us so you can give us both, right? I mean, expectation on the kind of growth that you will see in FY26. So net earned premium grew 20% for you. What can we expect for the full year, 26?
So, in terms of giving in-year expectation, it's a little early in the year, but broadly, over time, our guidance has been that we expect to grow faster than market, maybe between 5 and 10%, depending on the investments that we make during a particular year. But so that guidance broadly stays the same.
All right. Hi, Mr. Ramachandran. Good morning. Good to see you in. Nigel on this side. Your expenses of management, as you said, they've come down a little bit. But, there was, I think, there was talk of it going to around 35%. Do you think that will happen by the end of this fiscal? That's point number one. And combined ratio, I think earlier you were talking about it dipping sub the 100% mark. Is that possible by the end of this year? What would be the guidance on both these two parameters? Please go ahead.
Yeah, no, thank you, Nigel. On expense of management, the permissible limit to us as a standalone company is 35% plus allowances. If you looked at expenses of management, for Q1, for us, it's 36%. So we're not too far from what the regulatory requirement is. And we've been consistently saying the requirement is for us to confirm by this year, and we will do that. So quite comfortable on that front. On combined ratio, again, without providing guidance for this specific year, steady state on an IFRS basis, we believe a combined ratio of about 98% is what we want to target, maybe 3-4 years out.
So for the sake of understanding and reporting, because as of now, I mean, you're reporting your numbers in the accounting standard that's applicable as of date. So for the sake of understanding, that combined ratio, which is now above 116%, what can it come down to? We've taken your point on IFRS, but we need to understand, as per current reporting norms, what you report today, how much will it come down by? And also your underwriting losses have doubled. There's also an operational loss. So what happened there? And, will there be improvement in Q2?
So Surbhi, again, I want to emphasize that in terms of the underlying business fundamentals, there has been no shift. Which is, again, it's important that we separate accounting from economics, right? Because accounting, as I said, has introduced noise also because of the shift in the accounting standard. So whether it's incidence rates, whether it's the severity of claims, all of those secular long-term trends are as we have anticipated. And on a combined ratio basis, we will improve, but not in a position to give specific guidance at this point.
Okay. All right. So we'll leave it on that note then for today. Thank you very much for joining in, and look forward to more conversations during the course of the year. That's Niva Bupa. Stock in the pre-open is down about 3%. Overall, the market is actually down just 33 points. The Nifty, this is not bad at all, when considering what a lot of the Asian markets have been doing. So not too bad. Very quickly, just going for some final calls before we hit market opening. Mitesh, which stock?
Yeah. I'll go with a sell on Ambuja Cements for targets of 570.
Sorry, which one was that, Mitesh?
Ambuja Cements.
Ambuja. Okay. All right. 594. By the way, if you can quickly, I don't think we have time for that. I wanted to ask one more name, but Mitesh, later. Thanks very much for joining us. Let's just focus on HUL and Swiggy once again with Mangalam. Mangalam.
Well, HUL reported numbers yesterday. The stock was doing extremely well. The street believes that worst is behind. Now brokerages have put pen to paper Goldman Sachs has upgraded the stock to buy, target price of 2,900. Remember, they are saying that the earnings growth is turning around, driven by a combination of both macro as well as internal initiatives that the company has been taking. So revenue growth accelerates in the second half of this year to high single digits and in FY27 as well. Once that happens, even EBITDA improves on account of operating leverage because of the fixed cost that the company has and ad spends which will be maintained. So EPS growth accelerates in double digits over the next couple of years, which implies that, this is a positive, and they've upgraded their target price to 2,900. The only risks that we have intuitively, a sharp increase in input costs that may take the margins off, or the second thing is macros which are now improving. What if they get worse? So those are a couple of points that they put on the table. Swiggy, we've been talking about how, the internals are looking good from the numbers, and Motilal Oswal has gone ahead and written, they've said that Instamart's average order value is now within close distance of Blinkit. That was a concern earlier. Now, if that has happened, which implies that EBITDA margins for them will grow faster than expected, and Swiggy continues to gain market share in food delivery, with the key differentiator being Swiggy Bolt, which is a 10-minute offering that they have. So all these factors means that there could be notable operating leverage in their overall business and quick commerce. So it's a buy for them.
Okay. All right, Manglam got it. So Swiggy on our radar, 1% higher. But the stock you really have to look at right now is PNB Housing Finance. Look at it, 11% slam dunk on PNB Housing in the pre-open. Mr. Girish Kausgi has resigned. The market doesn't like that at all. Sudh's here with more details on this one, and I think a couple of other interesting brokerage notes. Sudarshan.
That's the main reason that of MD and CEO Girish Kausgi resigning from the company. Remember, in 2022, he was appointed MD and CEO for 4 years, but now he's resigning after completing 3 years. So that market is taking very negatively. If you take a look at the stock move, today it's opening with a cut of 11%. But since Girish Kausgi had joined, stock had almost increased by more than 300% from lows of 370 in November of 2022. It had gone to as high as 1200. That's the recent high. Now today, Morgan Stanley has come out with a note. It maintains overweight call, but has cut target to 1100 from 1300. It says that MD resignation casts uncertainty on growth plans, and investors may be concerned on way forward, especially in terms of execution that Girish Kausgi had laid out. And it expects a sharp negative stock reaction that you are seeing on the screen. And given the reasonable valuation, it has cut the target price but maintains overweight call. Another stock that will be in focus is IIFL Finance. Yesterday, company after the results had held earnings call, and it has increased credit cost to 3% from 2.5%.
And the stock should be lower, but it's come off quite a bit from the highs already over the last 4 or 5 days. Market opening, a third of a percent lower, 24,768. The Nifty Bank is down about 0.16. Mid-cap index absolutely flat, but there's some green, 30-40 points, but essentially flat. The small cap index will come up on your screen as well, and gives you a quick sense of how we are starting this morning. 24,750 on the Nifty, 55,900 on the Nifty Bank. So this is a very, very muted Friday morning start, but this is just the start. The heat map gives you a sense of how many are up and down on the Nifty 50 at least, and then we'll take it from there in terms of individual names which are making and moving around. So I think it should be kind of sort of no real... it's more down than up, but in a small way, essentially, right? I mean, Sun is on the other one end of the spectrum. Lever is on the other end, as Mangalam just told us 3 or 4 minutes back. So that's the overall picture. 50 points lower on the Nifty. Surabhi.
I'm only going to look at positive things. It's a Friday, Prashant. Look at Chalet Hotels. Forget the Nifty stocks for a second. Look at Chalet. 18% up. What a star, what a performer. The company's top line and revenue, it's grown by 150% in the last quarter gone by. And we'll get perhaps Mangalam back in to explain more to us. Maybe we should just put Chalet on the radar if we can. We'll get to, look at that. Look at that star stock. So even in a tough environment, companies are managing to sort of get investors' attention. Big one over there. In fact, consumption overall is doing pretty good today. HUL is up, Nestle is up. HUL is up 3%. Nestle is up about 1%. Tata Consumer, Eternal, Asian Paints, Trent, even ITC for that matter. There's a little bit of green in all of these stocks, between 0.25% to about 1%. And of course, Lever is taking the cake with a 3% up move. Consumption is the one area which is definitely showing up green. Reliance is very flat. So let's see, if Reliance starts moving higher next couple of hours, it'll be good for the bulls. But on the downside, Sun Pharma, Dr. Reddy, Cipla, Pharma seems to have an overall overhang. I mean, apart from the earnings, etc. I think this overhang on US tariffs is very clearly showing up. And pharma stocks had a very good last 4-5 weeks. So some of that is coming under pressure, profit-taking. M&M also, profit-taking 1% lower over there. L&T, some of the other big stocks on the way down. Bajaj Finance down about 0.5%, L&T down 0.5%. There's Wipro and Infosys, some of the tech names also on the lower side. But mid-caps are brighter. Mid-cap index showing some green, Nigel.
Well, that's right. Chalet, you mentioned Chambal Fertilizers, the other one. That's up close to around 6.5%, dancing away. So big up move out there. And HUL, for the last few years, everyone's been saying the stock didn't give any returns. In this month, it's given 10% returns. You had the change at the helm. You had the numbers that came out. And there's optimism that consumption will pick up from here on. Just take a look at that stock, 4.5% higher, and that's the big heavyweight. That's the top gainer on the Nifty this morning. What else is doing well? City Union Bank is up close to 2%, moving on rather large volumes, so keep an eye out on that one. On the flip side, Niva Bopa, we just spoke to the management. That's under some pressure. Welspun Living, that's down close to 1%, falling on large volumes, so just highlighting that. And Sun Pharma, actually, yesterday the stock ended lower with a cut of close to around 2%. And today, in fact, it's down another 3.5%. So in a couple of trading sessions, the stock has lost close to around 5%, and that's a large name that we're talking about. Other big winners in the broader markets, UFO Movies, that's moving higher. In fact, volumes are at around 2.5 lakh just in the first couple of minutes. So big move out there. And Team Lease as well. We'll have the management later on who'll be joining in. One more stock I wanted to highlight is NMDC, and I think we should get the stock up and, we should get some details out. Sources indicate to us here at CNBC-TV18 that they've gone ahead and they've increased prices by around 400 rupees. Keep in mind, we're in the midst of a monsoon and they've gone ahead and increased pricing, which is encouraging because they had cut prices for 2 consecutive months. That's in June as well as at the start of July. And the total quantum they had cut it was 650 to around 740 rupees or thereabouts. So because of the price increase of around 40 rupees, that's why, in fact, we're seeing the stock outperforming other metal stocks. It's up more than 2%. And keep in mind, it's a monsoon quarter, but global factors are supporting. So that's one factor. The second factor is, I just had to check that the OMC auctions, there was a price increase as well. So NMDC used the opportunity and said, let us as well push through a price increase. Explains why that one is up 2%.
Absolutely. And, just take a look at the index again. So it's that 45, 50 odd point cut. So not really running away in either direction. It's a very, very slow Friday morning start that we've got happening right now. By the way, the top, I'm not sure if this top volume-led losers. Reliance Infra is down about 4%. It's coming up with large volumes at this point in time. What else? Sun, of course, we've been highlighting. Sun is down about 4% as well. 3.5, about 4%. There is Star Health, which is coming up with volumes. Aurobindo, actually, it's pharma, right? If you had to pick up one kind of trend, it is pharma, and maybe the Nifty Pharma Index will show you it should be down at least 1%. So what have we heard in terms of 1.5% lower on the Nifty Pharma Index? Sun, Aurobindo, Dr. Reddy's, Lupin, all these Cipla, they're all down varying degrees. We heard from Commerce Secretary Lutnick earlier today, essentially saying that President Trump is going to come up with those pharma tariffs in the next few weeks. He's going to finalize and declare them. So that's the overhang here. It's been an overhang for a while. With regards to a country like Switzerland, pharma companies based out of Switzerland, if you look at the Swiss index, pharma companies dominate. He sent letters to 17 companies, but that's different. That's not. But it kind of tells you where this is. Perhaps this is going, asking them to lower drug prices when they supply to social security programs like Medicaid, etc. But that's for innovator companies. Here in India, we are talking about generic companies which sell at a much lower cost into the US market, where President Trump is perhaps looking at some tariffs in the coming days and weeks as well. So
Prashant, just wanted to add to that because I was going through a lot of notes on Sun Pharma. So this is not a company-specific thing. If anything, most notes are very optimistic. Plenty of overweight and buy calls on the stock. But it's just that the extent of their exposure to the US perhaps makes them one of the most vulnerable stocks, in the Indian pharma space. So that's coming off very sharply. Also, the pharma index has been among the best performers in the last several weeks. So it's just quick profit taking and gearing up for what happens.
The thing is, actually, if you remember the conversation with Lupin, Cipla, I remember they gave us numbers, right? The cost of producing a same drug. Forget drug. I mean, I'm talking about a capsule or whatever, right? I remember Lupin telling us it's about 8 times in the US as compared to India. So the real impact may be very, very little, even if there is a 10% tariff which is imposed on goods exported, because the
you still have to
difference
import.
is so large.
Yeah.
But it's not a good feeling, right? I mean, it just puts uncertainty in the air in terms of what really can happen. But that's essentially what's playing up as far as the stocks are concerned. We have Sandeep Bhatia now is joining us, Managing Director and Head of Equity India at Macquarie Capital. Sandeep, good to have you with us here. Thanks very much. Let's just start with that pharma question. And then maybe we can pedal back and talk about the bigger 25% plus penalty question as well. But pharma, your sense, Sandeep?
Good morning, everyone. I think pharma raises multiple issues. One is the immediate issue of whether Sun Pharma and some other innovator drug companies will get notices like what the Swiss and the other multinational companies have received from the Trump administration. In the last quarterly conference call, my analyst says that Sun Pharma, which derives around 20% of its revenues from innovative drugs sold in the US, said that they had not received any such communication. But this is anyway, with the Trump administration, everything is work in progress. Everything can change. Even when things are moving in a certain direction, they can move suddenly in the other direction. So that's where we are. So right now, there's a fear that this most favored nation treatment for Medicaid and other US administered medical programs, the pricing of that should match the pricing which the companies charge in other wealthy developed nations. So clearly, there's potentially a pricing pressure that can emerge for the US supplies. So that's where the worry is from. We need further clarity to make a real judgment on whether this is what it is, or whether even I would say that many things can be mitigated by lobbying, and whether, because this is a very industry-wide issue, as correctly pointed out by you, whether this will be lobbied away.
Sorry, that's an interesting point, because so far we are looking at US generics into the US, but you're saying the thing to look at, the metric to look at is exposure to innovator companies, right?
Yeah, so innovative, as far as India is concerned, right?
Yeah, absolutely. So Sun, your analyst is saying Sun's exposure to innovator companies like Pfizer, Merck, Eli Lilly, etc. is about 20%.
Innovative drugs. So that's what I'm saying.
It's about 20%.
Yeah.
So that is the number we need to pull out, and we'll do that and put that up as well, because that is the new part. These letters to innovator companies to reduce what they charge US consumers, and in turn, if these sort of innovator companies pressure their suppliers, right, like Indian Generic and others around the world as well. Surbhi.
Okay, so pharma definitely a watch point for sure. Sandeep, hi, good morning.
But remember, everything can be lobbied in this administration.
Yeah, everything can be lobbied.
Lobbying, negotiation, pressure. We've almost run out of adjectives to describe this on a daily basis. But Sandeep, morning, the rest of it also doesn't give a very happy feeling, right? And the market's been reflecting that. That's why the slow grind all through July, because anyway, those global tariff headlines are not very supportive in terms of India sentiment. And then you have our own earnings issue. What is your read-through of Q1? I mean, there's no single sector which can really spark off, anyone's imagination. It's not there in IT. FMCG maybe. I mean, people are now hoping that, look at Lever today, for example, this morning. So tell us if you think FMCG can be that safe haven that the market is desperately looking for.
FMCG can be a safe haven is a strong word. I think we need at least 6 months at the very least. I would think 12 months of strong volume growth, which comes to at least 6 to 7%, at least in the line of GDP growth. We are not there. Hopefully, we can get there by the October-December quarter. So that's where it is. I think the real challenge is at multiple levels. If you look at it, the market has continued to re-rate, and that's been the primary driver of the market strength, which is just a PE multiple expansion. On the other side, I would think that the retail participation is a good thing, but we know for a fact that fundamentally stock prices should track earnings, and we have seen earnings lag. So would I mind if there's a sideways or even a correction of 10%? I would absolutely don't mind that. A correction is actually welcome.
But that's my question. That's precisely the question that I wanted to ask, Sandeep. That as you see it from your vantage point, the next 6 months, are you looking at a time correction, which perhaps is not that bad then, or that price correction, like you said, 10% downside?
I would be in the camp of a time correction, just for the technical reason which I was just elaborating, which is the strong retail flows. A price correction is actually more welcome than a time correction because you get done with the pain very quickly. A time correction can be 6 months or even more than a year, and that's actually more painful for the market. A quick and sharp 10-15% correction is what is better from a market perspective. That depends on whether we see any big incremental bad news. I think the tariff news which came out yesterday is not actually that kind of a trigger for the market to correct 10-15%. So we'll wait and see if there are more bad news coming out which can correct the market.
All right. So the low of the year at least will get protected, that 21,700 that we saw earlier.
Sorry, I didn't hear this. Your voice was very, very faint.
The low that we saw, Sandeep, earlier this year was around 21,700. So even though the earnings haven't been very, very great, a lot of...
I'm still not hearing that. Someone else can repeat that question, please, because the other two anchors do better.
Yeah. So Sandeep, Nigel's basically saying that we're just trying to, clutch on to all optimism here. Since you're saying the likelihood of a time correction is more than a price correction, so at least the lows of the year should be protected.
I would think so, but I would actually recommend a price correction. Is the sentiment I'm expressing, that a quick price correction would be more welcome than a
better. Okay.
Yeah, but I take your point. But we have to see, Sandeep, the flows also, and I track that data on a monthly basis. And thankfully, those SIPs are very steady. But overall flows have halved from 40,000 crores. Now we're tracking, 26,000 crores on a monthly basis. But in this kind of an environment, then in this new normal, which would be the sectors where you would park if anyone has additional money, if anyone's looking at, deploying, where should the money go?
I think I would look for a couple of triggers in the market. I would want to see where we are in terms of the US Fed rate cut cycle. I would definitely think that we would see one rate cut coming through from the US this year, probably around the big shopping period there, which is the October-November Thanksgiving period, pre-Christmas. That actually means that we could also see a rate cut. That's not something which everyone talks about, but I would think the likelihood of another 25 bips rate cut post-Diwali for India is increasing, especially if the US cuts rates. So in that sentiment, I would think autos look interesting. We will definitely see consumption impetus in the October-December period. That's the base case that everyone's working on. But the larger high-value autos could see, therefore, improvement if there's one more rate cut. We have seen a 100 basis point rate cut till now, and we could see another for the year, and we could see another 25 basis point, which would be good for consumption, especially for large ticket items like autos.
All right, Sandeep, I hope I'm audible now. What about the hotel space? The last time around we had a chat that that's a sector that still looks good. Now, some of those numbers in the first quarter have been a little bit soft, but as we heard Mr. Puneet Chhatwal, he was saying that actually this year is going to shape up extremely well, and there was a lot of confidence in his tone as well. Do you think that's still a sector that you would look to get into?
Yes, I think autos is the quasi-consumption kind of story, FMCG, which we were discussing at the beginning of our conversation, but it's a faster growing and more stable. The last quarter was anyway expectedly weak with all the negative outcomes on air travel, crashes, and so on, and the war. But this festival season, again, high-ticket consumption like autos and travel could definitely see impetus come the fourth quarter, and hotels, therefore, would be a big beneficiary.
Okay. And so hotels and hospitality continues to be a space that Macquarie likes. So remember that. We'll keep that on board. Thanks for joining in, Sandeep. Good conversation. You have a good weekend, and we look forward to connecting again soon. Well, that's a view from Macquarie coming through. Let's just check the market again. There's some more pressure now. 75 points lower. The Nifty is just below the 24,700 mark. So let's see how this progresses early in the morning right now. Let's quickly move on to lots and lots of earnings that have come in post-market hours yesterday. And of course, Thermax is one of the companies on our radar. For the first quarter, the company's revenues actually declined. Not too much of a decline, 2% drop, but it's the first decline in several quarters. However, there's tremendous margin improvement that the company has exhibited. So let's discuss the trends with Ashish Bhandari, Managing Director and CEO at Thermax. Ashish, great to have you back on. And we'll start right there. So the margin improvement is looking very good. You're in double-digit margins. But let's first understand what happened with the top line and where the drag came in. I'm just looking at the, the split as well in terms of the specific sectors that saw some pressure. Industrial products and chemicals, they were up in the previous quarters, but they're subdued now. So just take us through what's happening with the revenue.
Okay. No major red flags. That's the top line story. We have a decent backlog. We just need to work that backlog through the system. In Q4, we had a reasonably big, more than 3,000 crores of revenue. So we started this particular year with deliveries that we were relatively short of delivering, that we had to deliver in Q1. But we also had several customers, because of the early onset of rains, where many of our equipment that goes to project sites and all, where projects were running late. So I would say in our math, about 250 to 300 crores worth of orders that we would have liked to ship in Q1, where we were ready with equipment, customers did not pick up. Don't see anything particularly of concern. Most of that got cleared in the first couple of weeks of Q2. Some amount of delays even in Q2 on project side. I think weather's a big pattern overall right now, but nothing to be concerned of. We are building a decent backlog. I expect a good Q2 and a Q3 on the orders front as well. And as we work that through the system, we will increase the revenues as well.
Can you give us some sense, Ashish, on how the year could be? I mean, would it be fair to expect at least double-digit growth? I'm still talking top line, by the way, because you also have exposure to exports, and there's just too much going on with the export markets. So just give us some more color on the revenue. Will it be double-digit growth, and how will the exports business be?
At least we are planning for good growth on both fronts. Some of the events of the last couple of days notwithstanding. And our revenues will follow from our orders. We need to make sure we continue to grow our orders, but our backlog is close to double digit. We just need the book and bill portion also to grow reasonably well, which is what we plan to be able to deliver double digit growth this year. At least that's what we are planning for. On the exports front, if you take a look, the first 2 years post-COVID were largely driven by India growth. India growth was much faster than our exports. In the last 1 year, international growth has started to go up as well. And as we enter this year, we are starting with our biggest pipeline for export projects. That includes Middle East, includes Africa, includes Southeast Asia. To the US specifically, our exposure is through our chemicals business and portions of our cooling business. Those are the two businesses. And in our chemicals business, about 20% of our top line comes from the US. That business will go through some amount of uncertainty in the short term. We hope that uncertainty is short-lived as well.
Okay, all right. Hi, Ashish. Good morning. Good to see you in. Well, last year you said it was a year of planting seeds, and now it seems that, the street will be hoping that fruit is what you'll be bearing in the next few years or so. That said, one positive in the numbers was gross margins going back to around 50%, and the EBITDA margins back in double digits, 10.5% or thereabouts. Could you tell us any kind of those one-offs, those problem pockets that we saw in the previous quarters? Are they all behind us? And will the margin trajectory gradually improve from here on?
I think the second part is right. The margin trajectory will gradually improve. We have a couple of areas where we have bad projects in low profitability projects. FGD, a good example of such projects. And in our view, there is about a 1.2% improvement in margins compared to Q1 of last year. That's driven almost entirely by having fewer things that went bad. Yeah, so last year was a tough one in that sense. This year, we would like to continue to show improved margins. We have got some bad projects to work through still. Most of those should get cleared. Yeah, so this year I expect it to be better than last year, but everything that we have been getting in the last 18 months has been things that we like. So our backlog that is building up is of reasonably profitable projects, nothing that is government, large, high civil and construction related stuff where previously we haven't done that well.
So the exit rate of your margins could be, close to around 50-100 basis points higher than what you have done, in the past quarter.
Let's see how the year goes, but at least that's the work and that's the effort. Yeah.
Ashish, I just want to clarify in terms of exports. What is your total exposure to the US as a percentage of total exports? How much is going to the US?
I'll say what the US number is. The US number is about $40 million a year. Yeah, which is very small. It's less than 5% of our total numbers. Chemicals is the big portion, and the second biggest is chillers that we sell to the US.
Okay, but that's helpful to know that overall it's just 5% of your total revenue, right?
Yes.
Total revenue, less than 5%.
Less than 5%, so it's not much of a, there's no need to...
Not much, but there's a secondary impact. We've got many customers in India, especially customers in textiles, pharma, that were expanding quite a bit. Yeah, and those are, if you think about, those are some of the sectors that are investing quite a bit. And as they go through some amount of uncertainty, I expect there would be some. But for Thermax, the news direct connect is relatively smaller. We just have to wait through the next couple of weeks and see how this plays out.
No, but thanks for that important call out that a second order effect could come in via textiles. What's your exposure? I don't know if you have it by industry, but roughly speaking, your exposure to textile players?
We are all 6 to 7%. Pharma would be similar, 6 to 7%. That kind of outlook. But good, most of that, their work is also domestic. Yeah, it's not all driven by exports. So I would say overall for India, I mean, given we export close to $150 billion to the US, there will be an impact. I do hope saner minds will play out and we will find a resolution that works for everyone.
Ashish, always a pleasure having you on the show. Thanks a lot for joining in. You're sounding optimistic about the coming few quarters. Yeah. We look forward to having a chat with you and hopefully things improve on the ground because you're a bit of a barometer with regard to whether or not the economy is recovering or not. Thanks a lot for joining in. Let's focus on JSW Energy then. They posted a steady performance in quarter one, healthy growth in profit. That was aided by scale-up in thermal as well as renewable segment. Mr. Sharad Mahindra, the joint MD and CEO of the company, joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, congratulations. Pretty steady quarters, what you reported. Can you tell us about the contribution of Mahanadi and how will it scale up from here on?
This Mahanadi, KSK Mahanadi and O2 have played a really important role in our quarter one performance, which we feel is one of the highest performances what we have delivered. But at the same time, we have to remember that apart from KSK and O2, there are two more factors which have contributed to this performance in terms of generation, in terms of margins, is our wind capacity which got commissioned last year was mostly in the second half of the year, post the peak wind season. So this time that capacity being available in the peak wind season, which normally starts maybe around May and continues up to September and part of October, has also played a significant role in the generation growth, wherein our RE generation has grown by 54%, driven by this organic capacity which we had commissioned last fiscal, and also the O2 acquisition. Apart from that, our Ind Bharat Utkal, JSW Utkal plant of Odisha, wherein our second unit of 350 megawatt got commissioned in March 25, has also contributed significantly in terms of energy generation and the EBITDA in the quarter one.
All right. Well, sir, how did merchant rates pan out, especially in a soft demand year? How much is open capacity as of now?
Yeah, coming first, starting with the demand, of course, the demand growth we have seen has witnessed a negative 1.5% growth over last year. But last year, we have to remember that there was a very high growth of 11%. So on a high base, there has been a negative growth, one on the high base. And also, we have to understand that this time, early onset of monsoons also has resulted. So these two factors have driven a negative demand growth, but we feel that this is very temporary. Fundamentals of the country in terms of the demand, in terms of the growth drivers continue to remain strong. In our case, when we started the year, started the quarter one, it was the open capacity was almost close to about 1.3 gigawatt. As we are talking now, the capacity, open capacity is only 900 megawatt, and out of which only about 100 megawatt, 10% approximately, less than 100 megawatt is on imported coal based. Our Vijayanagar plant, full capacity of 860 megawatt, is now tied up under long-term power purchase agreement and has shown a significant increase in the generation as compared to last year. Out of our balance 800 megawatt of open power, which is based in JSW Utkal plant in Odisha and the KSK Mahanadi plant, we have to recall that both these plants are in the core coal belt. The fuel cost is extremely low. This gives us a big advantage because of the low fuel cost, low cost of generation to sell in the merchant market. Lastly, what you asked about the tariffs, merchant tariffs during this quarter have averaged in the exchange at 4 rupees 41 paisa. But I'm happy to tell that we have been able to sell our entire untied capacity, which I just mentioned, at an average price of 6 rupees 14 paisa through bilateral and medium-term contracts.
Okay. So, Mr. Mahendra, putting it all together, I mean, you've got 3 new units on stream and that O2 platform. Can you give us some sense or a guidance for fixed EBITDA growth for the current year, FY26?
See, in terms of KSK Mahanadi, we have already demonstrated the performance with 857 crores of EBITDA in quarter one. And we all know that last year, the KSK Mahanadi, the operating EBITDA was about 2,400 crores when we were not there. We only came on 9th or 10th of March last year. So we are absolutely certain that seeing the quarter one performance and the efficiency improvements which we had started immediately after the acquisition in the month of March, some of them have already been implemented, some have been partly implemented, and balance will be implemented during the balance part of the year. We are quite confident that this benchmark EBITDA of last year, operating EBITDA of 2,400 crores, will be definitely significantly higher than that. And that will remain higher on a sustainable basis going forward, or maybe next few years. So in terms of the EBITDA, as I said, quarter one performance has already given us an idea. Maybe it can be checked upon. We normally are not in a position to give the numbers for going forward. No one knows. But we are absolutely certain that with the sustainable operations, sustainable EBITDA, entire capacity tied up, barring this 90 megawatt of untied capacity, we are certain that we'll be consistent and will be demonstrating what we have demonstrated in quarter one.
Okay, well, Mr. Mahendra, what is the capex required for reaching the 2030 target? If you can wrap it up with this, what are the internal tweaks between earlier and right now? How will you fund this capex program as well?
As we had said earlier, when it was earlier before our announcement of Strategy 3.0, we had said that 20 gigawatt by 2030. Then we realized with the order books, the PPA signed, work under construction, we had revised that to our capacity targets to 30 gigawatt by 2030 and 40 gigawatt hour of energy storage by 2030. And we are absolutely on track. As we have said during immediately after the acquisition of O2 Power with 1.3 gigawatt of operational portfolio which we acquired, and we reached about 12 gigawatt of capacity, that will be adding another 3 to 4 gigawatt in the current fiscal over and above that 12. And going forward, the PPAs which we have to deliver maybe in next 2 to 3 years time, which is total 10 gigawatt, we are certain that we will be achieving. So we are absolutely certain of reaching 30 gigawatt of capacity, operating capacity by 2030 and 40 gigawatt hour of storage. As capex, we have given the guidance for this 30 gigawatt by 2030 and 40 gigawatt hour storage. The total capex we envisage will be almost 1,30,000 crores during this period up to 2030.
Okay, we'll take a quick commercial break. Thank you very much, Mr. Mahindra, for joining. Welcome back. Just a quick look at the market. We're down about 60 points. 24,710 is where we are at right now, about a 0.25% lower. Let's just look at the Nifty Pharma Index, because that is essentially where the big pressure has been coming from all morning. And we've been trading for about 40-50 minutes or so. DRL, Cipla, some 2% of the Nifty Pharma Index. You know, there is an issue with regards to news flow, which is impacting, something new which is impacting at the margin. Let's talk about the first quarter performance from Chola now. And we have the company's president and chief financial officer, Arul Selvan, who is now with us as always. Mr. Selvan, good morning. Great to have you with us here on CNBC-TV18. So two questions, and I think you know what's coming. One is growth seems to have slowed a little bit. Maybe you did call this out earlier. So on a quarter-on-quarter basis, disbursements are a little lower. So one, if you can guide us towards what kind of growth and disbursement you will see for the year. And second is there is some asset quality deterioration across segments as well. Across most segments, actually. So I think some guidance on that will also help. Go on, sir.
Sure. First on the growth, so the growth has been impacted on two counts. One on the consumer and small enterprise loans, where we had consciously reduced our exposures to the fintech partnerships. We have spoken about it. We started reducing it from Q4 and continued to completely exit this in Q1 this year. So that has had an impact on the overall growth, because that by itself was a 40% disbursement drop compared to previous year first quarter, where this was going full steam on all the partnerships we were having at that point in time. The second area is where in SME we have consciously reduced growth in certain parts of the SME segment, which is the supply chain finance and the loan against shares, because these are not adding ROTA to the bottom line of the company. So we have consciously slowed down on these two segments, because this is not turning out to be a better ROTA product. But for this, the LAP has grown. Actually, VF has grown around 7%, which is better than the industry growth by itself. Industry by itself is muted in VF. And this is a general phenomenon that happens in Q1 of any year. And so we are not really unduly perturbed about this particular slowdown. We will see that it will catch up. As you know, we consciously focus on AUM growth, and we still stick to our stance on the AUM growth, that it will be in the range of around 20 to 23% for the full year also, which is what we have already clocked in Q1 now.
Okay, so 20 to 23%.
Just to follow up. So you're saying growth has come off because of specific issues at fintech also. So I had two or three questions. One is on the fintech side. I mean, I think this happened 3 quarters back, right? You're kind of slowed down consciously.
Started slowing down 3 quarters back, progressively exiting one after another of the fintechs. And in Q4, we exited completely, end of Q4. So in Q1, we had 0 disbursements through the fintech.
Okay, so it's completely now come to 0 then, right? I mean, and that's
on
essentially...
the fintech part, which is 25% of the CSL book, the traditional book continues to grow.
Okay, fair enough. And the other question was asset quality deterioration, sir, across the board. So what's the guidance there?
So in every Q1, you would see the comparative to Q4 asset quality will come off. If you see last year, it was even more pronounced, change over Q4 of the previous year, FY24 versus Q1 of FY25. But this year we actually hinted that while the Q4 benefit was not that much, we also hinted that the movement from Q4 to Q1 would not be that high. Last year it was more than almost like 100 basis points. This year it's around 30 basis points, 50 basis points if you compare Q4 versus Q1, and 30 basis points if you compare Q1 versus Q1. Yes, there is a little bit of a higher stress. This is primarily arising out of 2-3 reasons. The early onset of monsoon had pushed the vehicle finance NCL to be slightly on the higher side because the vehicle operators were not able to operate. The open cast mines have flooded, and that has also resulted in certain segments of the construction equipment borrowers not able to earn, through this particular Q1. As you know, most of our customers are earn and pay type of customers. They are not fleet operators with large pockets. So that is where you will have this sort of an immediate reflection of something happening in the economy or something happening in the environment impacting them, but they also quickly bounce back. We expect them to come back with the
Mr. Selvan, one of your competitors called out a broad-based issue, a slightly broader issue, and that, of course, I'm sure you've seen it. You're not seeing that, sir? A generalized kind of stress across segments?
No, we are not seeing that. For us, if we see our only expectation is to have a decent monsoon, which gets completed by at least by the early September. Unlike last year where it got extended to November, if that happens, yes, the stress will continue into Q2 and a bit in Q3. But if the monsoon, because it has come in early, and the prediction so far is that we will have a decent monsoon and it should also end in Q2. If this happens, they bounce back and the customers.
Can you give us some numerical sort of range to understand this? Because the rise in credit costs was in the first quarter was more than what the market had in mind, 50 bips. And you've explained why monsoon seems to be one big trigger. Now, where will your credit cost be as things stand? If things normalize, and there's Q3, Q4 as well, no monsoon issues over there. Where will you end the year with respect to your credit costs and also the GNPs? Now, provisions also have gone up in the first quarter. So clearly you see something ahead. So just give us some guidance on, gross NPA levels by the end of the year, credit costs by end of the year, and whether you'll need to take higher provisions in Q2 as well.
All of them are interrelated. So the moment the gross NPAs should be similar to what we are closing this year, closed last year, that is around the 3% number. And we expect the credit cost should be in the range of around 1.5%, 1.4 to 1.5% when we close the full year.
Okay, credit cost of 1.4 to 1.5% full year.
Yes.
Okay, so that your shareholders will be happy to hear, because that means it will come down from where it is at the start of Q1.
It will come down. So the CSEL fintech exit has created a certain amount of larger credit costs on that segment, which will come off by the time we close the year.
Got it.
We'll see that in one more quarter and slowing down in the subsequent quarters. So that would.
Yeah, no, that's great to understand, sir, because from what you're describing, this looks like a seasonal issue and not a wider structural economic issue that will last through the year. Got that point. Just a quick word on margins as well, because in the first quarter, we've seen, I think, about a 20 basis points compression. What do you expect for the rest of the year as the cycle continues and maybe we get another rate cut from the RBI? Margin expectations for full year?
As I spoke earlier, the rate cut benefit has not come through in our numbers in Q1. You will see that rate cut benefit coming through from Q2 onwards, because there is a lag effect of the pass-through happening by the banks as well, even on the EBLR, because that was only the larger cut came in at the fag end of the Q1. So you'll see that benefit coming through. To some extent, on the floating rate book, we may have to pass it off, but on the still, we will benefit on the larger fixed rate book. So we will see that coming through. So overall, around 15 to 20 basis points improvement on cost of funds will be clearly visible when we close this year, and that should flow through to the NIM. OPEX should be held at 3%, and if we cut down the NCL to the 1.5% from where we are today, we expect the PBT ROTA should be in the range of around 3.4 to 3.3%.
Thanks a lot, sir, for joining in. We look forward to having a chat with you, wishing you a good day ahead and all the best. Hopefully, things look up for you as well as the industry. The next management on our show is Amber. Well, the numbers look quite good, but to detail the past quarter and explain why was it so good, we have Jasbir Singh, the Executive Chairman, CEO and whole-time Director at Amber Enterprises that joins in. Hi, Mr. Singh. Good morning. Thanks a lot for joining in. Well, the growth in the RAC business was very, very strong, but in a weak demand environment. So explain it to us. How was this possible? Was it pre-lag manufacturing? If yes, then quarter two in all probability could be a washout. Explain that to us.
Well, the good performance in the quarter one has been a function of a couple of points. First of all is our component business, which has paid dividends, which we have been working on from last four years. Then the commercial air conditioner segment, which we added about 2 years back, that is also gaining traction. And then the mix of the gas charging companies which we were doing gas charging for, that has been converted into full ODM products now. And of course, the non-room AC components which we have added last year. So all these four points are actually adding us to deliver a good result in quarter one. As far as quarter two and quarter three are concerned, normally these are bleak quarters for the AC industry, and I think we will move in tandem with the industry. But we have guided, and I don't mind repeating it again, that we are very confident of outnumbering the industry growth by 10 to 12% by the year end.
Okay, all right. And in terms of volumes, you want to give us a number? RAC volumes, last year what was it? This year what will it be?
It's actually very unpredictable because we have comprehensive solutions which we deliver. We deliver components as well as finished goods. We don't control the demand side from the customer, so we give a complete package as in the form which they want. So it's very difficult to predict the volumes.
Okay, all right. Mr. Singh, you know what looked up as well as the electronics vertical? It looked very, very strong. You're doing ballpark what? 770 crores in the first quarter itself. And you've given a target of around $1 billion of revenues from electronics in the next 3 years, with margin scaling that 11 to 12.5% range. Could you help us out with, maybe in the next few quarters, you get to around the $500 million target on a run rate basis, on a quarterly basis? Will the exit rate for this year actually be in that vicinity or a little bit more?
So actually, if you see the journey of our electronics sector, we started electronics vertical in 2018 by picking up 70% stake in Ilgen Electronics. It was at that time a 300 crore company with 2.8% EBITDA. After 2-3 years, we started adding different applications in the industrial part on the electronic side. First of all, we added the hearable wearable in 2022. Then we added automobile sector. Then we added some customers in smart meters. Now we've added a small customer in the defense sector. So industrials, defense, aerospace, and the medical was missing. The two acquisitions which we have recently done, Power One as well as Unitronics, has added the industrial vertical. And with all these add-ups, we are confident that achieving $1 billion number by 3 years, next 3 financial years, is very much possible. And that's why we guided the market about this number. And I believe as a India, we are consuming a lot of electronics, and the content of electronics in every sphere has also increased. Just to give an example of air conditioner, earlier we were using about 400 rupees of PCB in an air conditioner. Now it is about 2,500 rupees. So that's where we are confident of delivering that number.
So FY28, Mr. Singh, good morning. FY28 $1 billion, right? From this business.
FY29. Next 3 years I have to FY29.
Okay, so starting 27, 28, 29. By 29, $1 billion in revenues.
Yeah.
And with regards to electronics, you ran us through all the segments. You are where you need to be, or will you continue to sort of enter newer verticals there as well within electronics.
So within electronics, one thing we did in 2024 was we acquired Ascent Circuits, which is into bare PCB board. Now, bare PCB, why we did it was because we wanted to give a comprehensive solution in terms of the components of PCB applications and the complete electronics as a whole. So that was our first step to backward integrate into component sector. And that is one business in which there is a big TAM. Today, out of $4 billion of PCB getting consumed in the country, only 10% is getting manufactured. So that is the first addition we have done. Second addition we have done is Power Electronics, which is Power One company. They manufacture battery energy storage systems. They do UPS and they do solar inverters. So that space itself is growing pretty well at a CAGR of about 20%, 25%. And the third one is Unitronics, which is into industry automation, 4.0 products, which is programmable logical controllers and also the human machine interface and also the drives. So this whole sector, we have added the TAM of almost about all three products, PCB, power electronics, and the HMI PLC. This is a TAM of almost about $12 billion. And I think we will continue to add some more products in the defense and aerospace by organic and inorganic way.
Okay. $12 billion from these three segments in electronics, right?
That's right.
And this is the India TAM?
This is India TAM.
Yeah.
See, India as a whole...
And your focus in all three is India?
Yeah. So India as a whole, 8 years back, India was consuming $32 billion of electronics. In 24, it consumed 115. In 25, it consumed 130. Business as usual, it should touch about 300 billion electronics getting consumed in the country by FY30. So we are taking care, we are building blocks carefully and gradually.
And the margins, Mr. Singh, will that 11.5%, as you continue to backward integrate, and we've heard from some of your other peers we speak to as well, that as you backward integrate, margins get a lift. So so that 11 to 11.5, FY29, you'll exit 29 with $1 billion and 11.5% margins, or it could be higher.
That's right. I mean, as of now, the building blocks which we have done, it looks possible, 11.5% with $1 billion by FY29. And if we continue to add some more applications which are at a higher margin range, then of course it can go further up.
Okay.
Okay. All right. We'll leave it on that note, sir. Thank you very much for joining in. Good to get perspective on the business, and we wish you good luck for the rest of the year. That's Amber. Stocks showing up in green, and they've had a good quarter gone by. By the way, check the market out and check Mahindra & Mahindra. Again, solid numbers coming through, 20% rise in their PV sales. And the stock is recovering from the lows, from the lowest point, though it's still, of course, slightly down. Another stock that's down and down quite a bit is PNB Housing. Let's bring Sudarshan back in. It's this sudden resignation of Mr. Kausgi that has taken the market by surprise. Sudarshan, tell us more.
So after today's fall of around 15%, stock is now down more than 30% in last 2 weeks. And today's fall is mainly on the back of sudden resignation of MD and CEO, that is Girish Kousgi. Remember, in 2022, when he was appointed MD and CEO, his term was for 4 years. But now, after 3 years, so basically his resignation effective date would be October 28, 2025. So basically, he'll be resigning after completing 3 years. Now, if you take a look at the stock move out, once he had joined or once he was appointed MD and CEO, that time stock price used to be around 370 rupees, and from that level it had moved as high as 1200, so it's up almost 320% from that level. So it shows you, and he had some aggressive growth target going forward also for FY26, but now his sudden resignation has come as a shock for the market. And after that, MS has come out with a note. It has maintained overweight call, but has cut target price to 1100 from 1300 per share. It says MD resignation casts uncertainty on growth plans, and also investors may be concerned on way forward, basically in terms of execution. And MS expects that it may have a negative reaction on the stock that already you are seeing on the screen, down almost 15%, but it has maintained overweight call mainly because of the reasonable valuation. But overall, it's negative for the stock.
No, absolutely. So thanks very much for that. Very useful. We'll take a quick break, Mitesh, on the other side with some trades. Stay tuned. Welcome back. As promised, Mitesh is with us with what he'd want you to do in terms of specific trades. Markets bounced, by the way, off the lows. Mitesh, take it away.
So, the market still is showing signs of mostly, contracting kind of an activity. The buying which happened, yesterday didn't see follow through. The selling today morning didn't see follow through. So it's a market which is not giving you directional bias. So trade with stock specific biases. I have a sell on Tata Power. If it breaks today's low, so 391 is the low. I think if it starts trading below that, there's a pivot around the 391, 392 zone. If it starts breaking below that, sell with a stop at 397. Look for a target of 380 to begin with, maybe even lower. And Power Grid is another one on the sell side trade. Keep a stop just above levels of 292.5. Look for targets of 275.
Okay, all right, got it. Mitesh, thank you very much for that. Well, with that, let's quickly shift focus to commodities as well and see what's happening over there. Manisha, tell us what's on your radar.
Well, I'm looking at copper. While almost all commodities or major commodities have seen a decline, but copper clearly continues to get pounded on the lower side. We've seen 6% of a decline in the overnight markets, and this is after 18% of a crash that we saw on 30th of July, the biggest intraday decline that we've seen since 1988. That is exactly when the market started to keep sense or record of prices. So this is the biggest intraday decline that we've seen come in for copper on 30th of July. So with this, when you look at the overall prices, on the week, we are down by 24% for copper. In last 1 month, it's turned into negative by 15%. For the year until now, we still are into the positive of around 10 to 11% there. But this is all happening after US has excluded refined copper imports from that 50% tariff that gets implemented from today onwards. Well, copper did hit record highs of 5.9. This was until the market did not know what the clarity was and what kind of copper imports would be allowed or excluded. So the markets continued to buy into the US, and we saw all-time highs at 5.9. Currently, with all that profit taking and the premiums absolutely vanishing, we are down to 4.3. Also weighing onto the markets is the China factory activity that shrunk to 49.5. Expectation was 50.2. Last month was 50.4. So in all senses, we saw a weaker number coming in there, also weighing on many of those industrial metal prices there. Interestingly, when you look at the stockpiles in the international markets as well, that is clearly messed up, as you would say. When you look at the COMEX markets, ahead of this 1st August implementation of 50% tariff, you saw a lot of excess inventory coming into the US markets there. So when you look at the overall inventories in US right now, they are at a 21-year highs. Take a look at the overall supplies as well. In COMEX, we've seen supplies go up by 170% to the tune of 253,000 tons there. In the LME, in the meanwhile, you've seen supplies get declined by 50% in the year till time. And markets do believe that with the kind of excess that US has right now, you will see that supplies going or flowing back into the London markets. So the next couple of months perhaps is exactly what we will be looking at, that balance being recreated when it comes to copper availability across the world. Interestingly, what the White House continues to tell us is that, and this is as per the paper released, that they have not ruled out future tariffs, especially when it comes to refined copper. So that tells you or doesn't tell you much there. But the Commerce Department has recommended a phased universal duty on refined copper. This could come into the tune of around 15% in 2027 and nearly 30% in 2028. But whether or not this is going to happen or not will be only known by the month of June or July in 2026. That is when the next review for copper imports is going to be happening. So clearly, it's not over yet. We have tariffs in place today, but this could change anytime.
Okay, all right, Manisha, thank you very much. Very helpful primer as far as where tariffs on copper really stand at this point. Time for a break. We're back. It's our segment, The Economy, Lata in Conversation on the state of the global and Indian economy post-tariffs with Chetan Iyer of Morgan Stanley. Coming up.